Good morning everyone, this is Daily Trade Analysis with the weekly recap for this week, which has been insane in terms of volatility, in terms of potential risk and escalation for recession, for trade wars. This week had everything, ups, downs, a lot of uncertainty, volatility, and this is a mix which is really difficult to navigate. So don't worry if you didn't trade, if you didn't take several opportunities because you were concerned, you were worried, you had fear, because this is what we have in the market. We have fear, we have uncertainty, and we have volatility, and we have a lot of risk. We are seeing a complex interplay of factors that are creating, as I said, a lot of uncertainty and frankly, some significant downside risk. Even though we had a lot of up and downs and we ended up the week basically reversing what we had last week with the panic in the markets, with the tariffs, the overall sentiment, I would say, leans to the negative. This is driven primarily by the escalating US-China trade tensions and increasing worries about a potential stagflationary shock, which poses these tariffs. Despite pockets of positive news, which we had with the CPI and the PPI, in other circumstances this week would have been a lot better. But with all these, in this environment and global tensions, geopolitical tensions with tariffs, I think this is dominating the market sentiment. The biggest overhang remains in the trade war. We are seeing China responding with the retaliatory tariffs and stern warnings, while the US continues to threaten further with tariff hikes. And this is not just rhetoric, it's a real escalation with serious economic implications. We are also seeing concerns coming directly from the Fed. Multiple Fed officials have voiced worries that these tariffs will fuel inflation, while simultaneously slowing the economic growth. This is a pretty dangerous combination because we are slowly moving towards stagflation. This is what JPMorgan CEO said, and after that, Trump, watching the bond market, watching how China and other countries were selling off all their US debt, then Trump paused those tariffs. In this stagflation scenario, this is what the market fears most. And University of Michigan data shows a significant jump in both 1-year and 5-year inflation expectations. This is the first thing I would like to mention. Look at this. 1-year inflation expectations pushing up 6.7 from 5. And 5-year inflation preliminary 4.4%, with 4.1 coming. This is big, this is huge, and these inflation expectations are also being watched by the Fed, because even though they are expectations, sometimes the expectations turn to be real, manifest into the people, and these change habits on spending, and these become real. So 6.7% of inflation in the 1 year, it's insane. As we can see also on the CPI, and we had pretty low numbers on the core, 2.8, 0.1, coming down from these numbers on the previous. Also, the headline CPI month over month, negative CPI. Disinflation, this is good. This is what the Fed wants. But we have the trade war, we have these tariffs. And also on the PPI front, we can see how the PPI slowed down also a little bit in both the core and also the PPI month over month minus 0.4, decreasing the producer prices. This is a real good, but a lot of analysts are saying that this would be the last good numbers on CPI, because these are coming from last month when we didn't have tariffs and trade war. The upcoming month, April CPI, would be a disaster. Would be a disaster. What else? We have JPMorgan, Morgan Stanley, and Wells Fargo basically reporting earnings, starting the earnings season. And this happened on Friday, and we are seeing positive numbers on JPM, positive numbers on Morgan Stanley, not so well on Wells Fargo and BlackRock, but overall, I think the banks delivered solid numbers, indicating that there's some underlying strength in the financial sector. However, it's not all good. So we can see how, in terms of EPS, I mean, JP Morgan, it's destroying the expectations. Also, in terms of EPS, Morgan Stanley is also beating expectations. Wells Fargo, it's also beating expectations. And BlackRock also, it's beating expectations. So we are seeing a slightly decrease in net interest margins and average deposits below expectations in Wells Fargo and BlackRock, but overall, the banks, the financial sector it's pretty strong. So where does all this leave us? The US market, particularly the Nasdaq, is being destroyed lately. The trade tensions, the risk of stagflation, and the mixed inflation data create a very uncertain environment. So individual companies may post good results, as we are seeing with the banks, but the broader economy, macroeconomic picture is casting a very, very long shadow. I'm monitoring very closely everything that is happening. We have to be on top of everything, every tweet, every news, every social media post. We have to be on top of that. So let's now turn into the price action, into the charts, because down here, as always, we have the market internals with the volume on the left-hand side and the advanced decliners. And as you can see on Wednesday, that's when Trump announced the pause, the 90-day, 3-month pause. We had huge increase in volume. And in advanced decliners, on Tuesday, we were selling off, and on Wednesday, we were just, again, V-reversal. And this happened in both the ES, the S&Ps, and on the Nasdaq. On the Nasdaq, we had a lot of volume, 700 million. This is insane. So this is what happened this week. In the weekly chart, we can see that last week we declined 10%. And this week we bounced back 7%. So this is why I'm telling you, be careful with this volatility. This is a swing of, this is 3,000 points in 1 week. 3,000 points. And to put that into perspective, this is the weekly chart. Weekly chart. In the COVID era, we have minus 8%, followed up by another 9%. So this is, in terms of volatility, let me just show you the VIX. Look at this. This is a spike in volatility. Due to tariffs, the VIX at 60. It's insane. And then we have a lot of turmoil. We are not out of the woods yet, because we are still at 37 in the VIX. So in terms of the Nasdaq, I mean, it was really difficult to trade. But after these 90-day tariffs are still there. And there are still a lot of high pressure on these numbers. Every country is going to have to pay more for imports, and US is also having retaliatory tariffs from those countries. So this is affecting everyone. This is a lose-lose situation. So the other countries are losing confidence in the US, And we are seeing that in the dollar. Look at this. The dollar is being demolished. So this is not yet a really big bounce. I don't trust this. Why? Because basically we are seeing a huge spike on the pause, but the pause is not, Trump is not removing, is not deleting his stance. It's not removing the tariffs, it's just pausing. So it's still a lot of pressure. He's willing to negotiate, but as you can see, he's willing to just destroy the economy for him to be in a well position for negotiations with other countries. So be careful, because this may change in the blink of an eye. This is the 1 hour chart. So what we can do with this? I think we should move towards the daily to see really what is happening here. So we have, what do we have here? Let me just remove all these past, because we have we have two things I would like to mention. The first thing is this inverse on the daily, which is pretty dangerous. This is a daily inverse fair value gap, which was respected, and this is in late March. So we are coming back up with this huge day of 11% on the Nasdaq. But there's no gap down here. As you can see on the daily, we have no gap. We don't have any imbalance. So that would be better in my eyes, to have this kind of imbalance. We have this 4 hour, which is being bought up. This is really interesting. Let me just show you. The 4 hour and the 1 hour is really the same. So this is the only thing which is holding right now the hopes of everyone. I'm willing to track this because it's being respected. So in terms of technical, I need to be tracking this. And this is a 1 hour bullish fair value gap, which is being perfectly respected here. So there will be a lot of stops down here. And this is a zone which I would like to be respected for me to trust even more the move higher. But this can be destroyed. Let me see the volume in here. Volume is pretty good, but it's not the same as this one. We have 150,000 and here we have 200,000. I mean, in terms of volume, it's not super huge. I'm sure that the big investors are adding in these 200 weekly moving average. This is a weekly chart. This is the 200 on the weekly. A massive bounce on this is it's really technical. So I'm expecting a lot of investors, institutions, big players are adding at this spot, but I don't trust it. I don't trust it because we as retail, we have to cover. I would like this to be done like this, to really have this as a manipulation move, but we have these lows which I don't really trust. And this fair value gap is just in the middle of, I don't know, guys. I've seen a lot of things and I'm not trusting this yet. I'm highlighting this for you, just for you to be aware. And also we have on the daily these, we are in the middle of a huge, where we are here in the upper part. So the most probably expectation is just to go there. I would like for this to basically do like this for a last manipulation move for all the retails that are being trapped here. So be careful with your positioning if you are betting to just go straight into the inverse. I don't think this is going to happen. So I'm gonna play the conservative play and I'm just going to wait for a big fear, a big pullback just to trade, because I just had 2 trades this week and there were just, I mean, it was 300 and 400 or something. I was just watching in my last weekly recap. I told you that this week and the Monday explicitly, I said that this is going to be a Monday of watching the market, what was happening, and we closed with a gap and we opened with a huge spike, and this is being respected. But I mean, the uncertainty and the volatility is so high that I don't think we are just going to fly everywhere, because the risk is not out. It's not being removed. Tariffs are still there. They were just paused, and a pause is just power for negotiation, but there's still a lot of risk. So what we can do is just continue watching the market. This candle on the daily, after this red candle might be an order block on the daily. We have also to see that, and this pullback, this orderly pullback, looks good because we are now coming back to this beautiful BSL that I'm just going to track also. So we are enclosed in two zones of liquidity, which is why I'm a little bit concerned. I'm not super confident. We have also this, which I need to track also, the quadrants on this. I would like this zone between the consequent encroachment of the 1 hour and the consequent encroachment of this week, this candle week on the 1 hour. This is still a 1 hour. I'm not going to trade the 1 minute. I'm just going to watch the higher time frames, because those players on the daily, on the weekly, are the ones that are controlling the market right now. Big money. So 18,200, I would like the market to give me another opportunity here, and perhaps going down here. And people will be super scared, because down here they will be, okay, we are reversing, but I'm really expecting the market to give one last swing just to destroy everyone's position into the move higher. This is what I'm expecting, nothing else. I'm not watching convergences and divergences in other markets. I'm just watching the price action and the news. And right now, I still think the sentiment leans towards the downside. There's a lot of downside risk still. I'm seeing convergence with the dollar. US is pretty weak right now in terms of geopolitical and strategic positions. And let's see what happens. VIX and volatility came down, but we have to watch. Real investors are also watching. They are not betting everything. Let's see the volume in this 1 hour. You don't see big volume here. This was higher. This was higher. So what is happening, it's in terms of price action is, yes, a big swing, but it's not a big swing in terms of volume. So who is moving the market? There's a lot of volatility. There were a lot of jumps in the price action. The ladder was insane gaps everywhere. I mean, the volatility was insane, and we jumped more than 2,000 points in 1 week, in 1 hour even. So be careful with this, because this can destroy everyone's account. Be really careful. And that's all from my side. As always, thank you for your time. If you found this weekly recap useful, remember that I do this every Saturday for you to review everything from the fundamental to the technical, and give you my opinion on the markets, on the price action, on the sentiment. It's just for you to learn, to have my perspective on the markets. If you like, please, if you are new to this channel, welcome. Hit the like button. Show me your support by subscribing. If you have any question, just put that in the comments down below. And remember that discipline, patience, and risk management are key for your success. Without those three, you will not be successful. Have a nice weekend. Rest, disconnect from everything. Try to enjoy your time, and let's be back on Monday. Stay safe, everyone.